Hi guys, it's Stock Curry, and in today's video, I'm going to teach you proper risk management. We're going to go over diversification, allocation percentages, the use of margin, and how you can modify rules based upon your own personal risk tolerance level. So let's get into it! Okay, before we even get into today's topic, I do want to remind you that I am not a financial advisor. The best way to learn about risk management is to actually hire a financial advisor. And the reason is because everybody's risk tolerance levels are different. What I'm going to talk about today is going to be very, very generic. If you were to go out and hire a financial advisor, the very first thing they do is they would sit down with you and they would do a risk assessment to figure out what your own personal risk tolerance levels are before they even started to advise you on what to buy, sell, or hold. Now, I'm not a financial advisor. I've never been a financial advisor, so I can't even begin to do that. What I can do is give you very generic risk management advice and then allow you to go modify that advice and use it in any way you see fit based upon your own personal risk tolerance levels. So that's what we're going to do today. This is going to be very generic advice that's going to help you out. The second thing that I want to say is there's going to be some things that I talk about today that might offend you, especially if what I talk about goes completely against your beliefs, or if I start talking about people that have, say, lost 30% in the market this year and you feel like that's you. I just want to say this up front. I don't know you personally. I am creating a YouTube video that's going to be watched by thousands of people. So if you start to find yourself get offended, just realize I'm not talking to you personally, that you might have just gotten swept up in this thing. There are two ways you can handle advice if you feel like you start to get offended. One is just to let yourself get offended, dislike the video, quit watching, and never learn a thing. The other way is to pull out a pen and paper, write down some notes, and try to consider what you might be able to learn. So before I get into today's content, if you don't already have a pen and paper ready to go, I want to encourage you just to pause this video right now, grab a pen and paper, and start taking some notes. So I'm going to give you a second right now to pause the video, grab a pen and paper so that you can take some notes. Okay, hopefully you've had a chance to go ahead and grab a pen and paper. So let's get into it. Let's start this video off with diversification, which really is the very first step in risk management. Now, in any investor portfolio, I like to have a good set of long-term stocks and then short-term trading stocks. And my long-term portfolio is going to be the bulk of my portfolio. At least 80% of my overall portfolio is going to be long-term. These are stocks that I buy and hold for years and years and years. Now, in the long-term portfolio, what I like to do is I like to split it up into really three sectors. I like to do what I call just good, solid base companies. Pillars of the portfolio, things that aren't really going to go up that much, but it's just going to give me a good solid foundation. And for that, it's, really hard sometimes to pick individual stocks. So I just like to go with a straight up ETF. Something like SPY, which is an S&P 500 ETF, QQQ, which is a NASDAQ 100 ETF, DIA, which is Dow Jones ETF, or even VTI, which is a Vanguard, just total overall market ETF. You could also do a Russell 2000 ETF if you like a little bit more on the high growth. So that's one pillar of the portfolio, is just a straight up market ETF. That way the long-term portfolio isn't seeing massive rises and drops. There's one YouTuber today whose public portfolio was down 12% in one day. Like, that should never happen. So, we're going to talk about that a little bit later in this video. But on the long-term portfolio, a good chunk of it being that just solid, stable stock or ETF. And then another portion of the portfolio I like is to do growth stocks, long-term growth stocks. Those are going to be things like Apple, maybe AMD, NVIDIA, Microsoft, Tesla. There's a wide variety of them. I like to have a lot of banks in there, such as Goldman Sachs, Citigroup, Bank of America. And there's a new banking stock that I never even considered before that we might, consider. I'm going to talk about it a little bit later, one that's StockMobot. So, those sorts of things. And then the other side that I like to go for are going to be the stocks that are going to give really good dividends. For me, things like Cleveland Cliffs, VALE, things like that, some high dividend stocks, and then maybe even some lower dividend stocks. A lot of people did AT&T for a long time, although they've recently gotten out of that. But there's a lot of good dividend stocks out there that might just do a 3 or 4% dividend, but at least you know it's steady income you're going to make, year over year. And when it comes to stability and control, a lot of people don't even invest in the stock market. They literally go to the bond markets because you get guaranteed income in the bond markets. Doesn't matter if the stock or bond markets are going up, down, it's irrelevant. You just have a guaranteed set amount you're making every single month or year. So the bond market is another great way to do it if you don't necessarily want to do the diversification throughout dividend stocks and just stable ETFs. You could just go literally buy bonds. So however you want to do it, there's different ways, but the point is you want a large portion of your portfolio to be long-term hold stocks that are going to go up month after month, year after year. And yeah, you might have a few years where it goes down, but overall, in general, you're going to see growth in your portfolio. And then a much smaller percentage of your portfolio, and again, it's going to depend upon your own personal risk tolerance, whether you want to do a lot of risk or a little bit of risk. But generally, people will do anywhere from 10 to 30% of their portfolio in very speculative stocks. They can either be short-term trades or they can be high growth stocks, however you want to do it. And generally, these are going to be the small cap stocks. Now, within there, you even get a lot of risk tolerance that you could run into. So, for example, if you're buying stocks that are high growth, that are already profitable, and they're just seeing tremendous growth, that's going to be a lot safer investment, a lot better if you're risk adverse and just can't stand the idea of losing money. On the other hand, if you're going after SPACs that literally have zero income, like DWAC, for example, or you're going after IPOs that have no revenue, like Rivian, for example, if you're going after companies like that, those are very, very, very high risk. They have a very high chance of going down and losing money. And those also, of course, have a very high chance of rising up tremendously. So the more risk you take on, the more chance you have of losing money, but also the more chance you have of making money. The problem is, if you get a year like we've had this year in 2021, it's those very risky high growth stocks that have been absolutely clobbered, that are down 50, 60%. Meanwhile, the stable stocks are all up 20 and 30%. Some are up 50%. And so depending upon how your portfolio has been diversified this year, you are going to see very different returns from somebody else. There might be somebody watching this video that was very heavily diversified in long-term stocks that were stable, and your portfolio is up 30 or 40% this year. There's other people that may have been very heavily invested in high growth stocks and very risky stocks and have almost no long-term hold stocks, and you may be down 50 or 60% this year. And so again, it just depends upon, your own personal risk tolerance and what you want to do. But if you want to kind of lower those risks, if you're one of those persons that's down 30, 40, 50%, you might want to consider maybe moving some money into some of those longer term, smaller growth stocks, the blue chip companies, the boomer stocks, if you will, that will really level out your portfolio so that you're just not seeing these major drops in your portfolio. Now, the other thing I want to talk about is margin. So when it comes to margin, I would really recommend that you only use margin on very stable long-term stocks. Now, there are people, and I've even done it myself, where I'll use margin on some high growth stocks if they're just tremendously beat down. But usually if I'm doing that, I'm only using margin for like a few days or a few weeks. It's very, very short term. And, the problem is, and you're about to see this when we talk about AMC a little bit later, where if you're using margin on very, very high risk stocks, there's a good chance that stock could go down. Remember, that's the whole point, is high risk of dropping. There's a chance that stock could drop massively and you could end up getting margin called. And I mean, if that happens, you're exponentially increasing your losses. Not a good idea. Honestly, as a new trader, a new investor, like personally, I didn't use margin at all until I had been investing in the market for years because it's just so risky. Margin just tacks on a whole new level of risk. So, if you're very risk adverse, you might want to consider just not using margin. If you are a big risk taker and you want to use margin, that's fine. Just, keep in mind that there's a good chance you could very easily wipe out your entire portfolio within a few days if your stocks drop rapidly like they have been over the past few days. So just keep that in mind. That's the risk of margin. Yes, it can tremendously increase your profits when stocks are rising, but margin can also tremendously increase your losses when stocks are dropping. Margin can turn a 5% gain into a 10% gain, but margin can also turn a 5% loss into a 10% loss. So margin is very, very risky. So if you like risk and you want to just basically, gamble and you want to throw a bunch of margin into these very, very high risk speculative plays, that's fine. Just keep in mind that you're also risking losing a ton of money. On the other hand, if you're very risk adverse and you don't like the idea of taking on risk, you might just want to consider not using margin at all. So, different thoughts on that, but just that's how margin works. So you just got to be careful with it. And then finally, when it comes to risk tolerance, like I said, depending upon your own personal risk tolerance, you can modify these a little bit. Maybe if you're very risk adverse, you do 10% on speculative plays and 90% long term. Maybe if you are a big risk taker, you do 70% long term and 30% on the high growth, high risk plays. However you want to do it. But one thing is, a lot of people this year have been burned, especially new investors, because they've had 100% of their portfolio in these very high risk stocks. And when the market crash happened in March on the small cap high growth stocks, those portfolios went down 50-60%. A lot of those retail investors have never recovered. Their entire portfolio remains down 30, 40, 50, 60%. So, if that's you and you're like, man, what do I do? You can sell some of those, just take the tax losses. You can roll those tax losses over into future years. And, you can just take this time now to fix your portfolio and get some diversification so that you're not seeing those major losses in future years. So again, none of this is financial advice. If you want to know what's best for you personally, then the best thing to do is go hire a financial advisor. Look, it's not something that you have to go pay a ton of money to do. Believe it or not, I have actually hired financial advisors in the past. About once every 5 to 10 years, I hire a financial advisor because sometimes, even though I have a lot of experience, I just need a reality check. I love to hire experts that can come in and say, look, I know you've been doing this for years, but you might want to just change it around a little bit and do this instead. I always am for hiring experts and getting really good advice. I've hired financial advisors before. It's really been great to get that third-party look onto my portfolio and my investments and just help me out. So even me, I don't know everything. I never claim to know everything. And I hire experts such as financial advisors, and I have an accountant, and I have an attorney, and I hire a lot of experts to help me out because I just don't believe in doing everything yourself. I believe in getting help when you realize you don't know everything. So hopefully that helps you out with risk tolerance. We'll get into a little bit more details on very specific stocks when we get to the stock picks in 1 minute. And speaking of the individual stocks, let's just go ahead and get into those right now. For those of you guys who are new to this channel, maybe this is the first video you've ever seen from me, I wanted to let you know that my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day I spend hours and hours and hours watching YouTube videos, and then I consolidate all of the stock picks from the top YouTubers, and I put them together into a single video. I give you both the cliff notes on their stock picks, as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into our stock picks, I just want to remind you that I'm not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my videos, and it is also the app that I use for all of my trading. All right, let's do a quick market update, and then we'll get to the stock picks. So the market started out today really high. I mean, they rose all the way up to about 2% up before the news came out that the new pandemic variant was found in the United States. Once that news came out, the markets dropped over 3% intraday to finish the day down over 1%. The NASDAQ was down almost 2%. Absolutely absurd and a major overreaction in my mind. Everybody knew that the new pandemic variant was going to be found in the United States sooner or later. This is no surprise. It's no shock. All of the doctors are saying all the symptoms are mild. It's nothing to really be worried about. And yet the market drops 3% intraday when the news comes out. So I really feel like Thursday is going to be a green day, especially after we just had 2 major red days in a row. I really think Thursday is going to be a green day. Now, Friday is still a bit uncertain, but I'm pretty sure Thursday is going to be a green day. So that's my quick market update. As far as the market correction, everything technically and fundamentally is still pointing to that happening, at least through the end of the next 2.5 weeks. Like I said, through December 17th, it still looks like we are going to get this market correction. So nothing really changes there, but day to day and obviously intraday, we can be up or down massively. I mean, that's part of going through a correction is you get major volatility, and volatility just means that you have major swings up and down. We may very well see these major swings of up or down 1% every day for the next 2.5 weeks. So just hold on tight and be ready for it. Like I said, after the market correction is over, which I think it'll be over by the end of December 17th, I think after the market correction is over, we're going to see the markets rise back up. We might not see the markets rise back up until the new year, starting around January 2nd. But for sure, either that last week of December or the first week of January, I do expect that we're going to see these markets start to rise back up. And we're going to go on a really nice bull run, I think, in the first quarter of 2022. So that's my market news and market prediction. Let's get into the individual stock and crypto picks now, and we'll start with crypto. And the first crypto that we're going to talk about is CRO. This is Crypto.com coin. Keen and Grace let us know about a huge upward catalyst for CRO. Remember that CRO is the official token of Crypto.com. It's kind of like buying stock in the Crypto.com exchange. Well, it was just announced that Crypto.com is acquiring 2 small exchanges that will enable them to offer derivatives and futures to US-based customers. That is huge news. For a long time now, US crypto traders have been using VPNs to connect to Binance in order to do futures trading. Binance has announced that they will soon ban US traders from using their platform through a VPN. Now Crypto.com is coming to the rescue of US traders. The reason this is such a big news is because futures are how you make money on crypto when it goes down. Futures also allow for leveraged trading, sometimes as high as 100x leverage. And futures also allow for derivatives trading where you can buy options on futures. Futures options work the exact same way as stock options. You can buy calls or puts and make money on both the way up and the way down. So all of this is very big news for US traders, as Crypto.com will now be the only legitimate exchange offering futures trading to US residents. By the way, if you want to sign up for Crypto.com now and get $25 in free CRO, I have a link for Crypto.com on my promotions page. I have been using Crypto.com for almost a year now, and I love them because they have low fees, no bid-ask spreads, and they offer more altcoins to US residents than any other exchange. In fact, Crypto.com was the first US exchange to offer Shiba Inu, and they remain the only US exchange to offer Dogecoin. So if you want to get access to altcoins before most US residents have access to them, and you want to get $25 in free CRO, use my link in the description below to sign up for Crypto.com. And the next crypto we're going to talk about is MANA. This is Decentraland. Larry Jones said MANA is the future of where we are going. Metaverse is the future, and Larry Jones likes to invest in things that are coming in the future. Now, MANA was down over 4% on Wednesday. It initially started to rise, but then dropped after China came out and said they were going to ban the metaverse. Of course, the idea of banning the metaverse should really not have any impact, really. I mean, China bans everything. Regardless, I'm glad we got that out of the way 10 years before the metaverse really becomes big. Now we don't have to worry about China banning it like 5 or 10 years down the road. So I think today's pullback was silly, and if you look at the 3-month chart, you can see how MANA is at the bottom of its upward trend line. So technically, MANA looks to be a really good buy right now. Just be aware that crypto has been trading alongside the stock market lately, and since we are in the middle of a correction in the stock market, we could very well be in the middle of a correction in cryptocurrencies as well. So you might want to wait a few weeks for the correction to finish before buying any crypto. And the next crypto we're going to talk about is SHIB. This is Shiba Inu. SHIB failed to hold confirmation of a rebound as it failed to get the golden cross on the MACD. So for the short term, SHIB looks like it will either trade flat or slightly down. Now fundamentally, the use case for SHIB is increasing. Keen and Grace let us know that a major doctor franchise is now accepting SHIB for payment. Further, we already know that retailers have the ability to accept Shiba Inu next month through BitPay. Keen and Grace let us know that Now Payments is also adding SHIB to their payments processing platform. So retailers who use Now Payments instead of BitPay will also have the ability to accept SHIB soon. Further, Keen and Grace also let us know that another exchange, Mercado Bitcoin, the largest exchange in Brazil and Latin America, just listed SHIB. SHIB is now available on all of the top 10 cryptocurrency exchanges. Okay, now on to our stock picks, and first up is AMC. AMC broke through support today and fell over 15%, down to $29.75. Now, a lot of people are getting worn down with AMC. A lot of people on Reddit, YouTube, and Twitter said AMC was going to go to the moon, it'd be worth $1,000 or even $10,000. Now, I want to be clear that just because a stock has short utilization greater than 100%, doesn't mean that we're going to get a short squeeze right away. The fact is, market makers and hedge funds are very powerful, and they have the power through tools like failure to delivers, synthetic shares, and dark pools to manipulate the share price and prevent a short squeeze from happening. The sad thing is, all of these tools are legal to use. It doesn't make everyone on Reddit, YouTube, and Twitter wrong. It just means retail investors decided to enter a war against these very powerful institutions, and right now they are losing the battle. But it's just one battle. Retail investors haven't lost the war yet. They're just losing the battle right now. So technically, AMC is showing strong signs of bottoming out in the short term. It bounced right off of the 300-day EMA, and the RSI is oversold. There's a very good chance that we will see AMC rise back up to $32 or even $37 very quickly. What happens after that is still quite uncertain. I will tell you that the utilization is still quite high at 75%, the short interest is still high at 16%, and a short squeeze has not yet happened. There are a lot of hedge funds that are still down massively on this stock. Now, if you were one of those people who loaded up on AMC and now you're down massively, I feel bad for you. Everyone who has talked about AMC has said time and time again not to over leverage yourself, to only invest money that you can afford to lose. Unfortunately, it looks like a lot of retail investors went all in on AMC and even used margin to buy more shares. It really looks like today's drop was the result of a lot of margin calls taking place. That never should have happened. Nobody should have used margin on AMC. I mean, outside of Trace Trades that went all in on AMC, most YouTubers only opened relatively small positions on AMC. So if you lost more money than you could afford to lose, or especially if you made the mistake of using margin to buy AMC shares, I just want to encourage you not to get down, but just to take this as a lesson. The stock market is not a get-rich-quick casino. This is a place that requires risk management and emotional checks. Now, for everybody else, AMC is really cheap right now from a technical standpoint. And I think now would be a great time to buy in. And Keena Grace agrees. He said this is a great opportunity to buy into AMC for cheap. Next up is DKNG. This is DraftKings, and they're an online sports betting company. DKNG fell hard today. It was down over 9% and fell below the stop loss price of $33 that I gave you yesterday. StockMo said he's been selling his other gambling stocks such as RSI and PENN and moving money into DKNG. He wants exposure to gambling stocks, but he also wants to take the tax losses on his other gambling stocks. That is a very smart move that a lot of professional investors will do. They'll keep their portfolio balanced and diversified while also taking tax losses, while also avoiding wash sales by selling losing stocks and moving that money into other stocks in the same sector. Now, specifically looking at DKNG, both StockMo and myself think DKNG will do well in the long term. But in the short term, this remains a falling knife, and technically it just got really bad. After 5 days of holding the $35 support level, DKNG just fell through the floor on Wednesday. Even though the RSI is all the way down to 19, this could continue falling further. At this point, since the resistance level is now gone, I would just wait for confirmation of a rebound before buying in. There's no telling how low DKNG will fall in the short term. There's a good chance that because of the tax loss harvesting that is happening right now, that DKNG will continue to fall through the end of December and not start going back up until the beginning of January. And next up is PLTR. This is Palantir, and they're a data analytics company. Chris Sain said he bought more PLTR on Wednesday. Now, in yesterday's video, I said PLTR was exactly the same as DKNG technically. And as you can see, both PLTR and DKNG dropped below support levels on Wednesday and became falling knives. So I would personally treat PLTR in the exact same way I would treat DKNG. I would wait for confirmation of a rebound before buying in because there's no telling how low it will go in the short term. And next up is PRU. This is Prudent Financial. StockMo added PRU to his portfolio today. As the Fed gets closer to raising interest rates, banks such as PRU will see higher and higher profits. Now, yesterday, I talked about how GS would be a good stock to buy for a long-term hold since the PE ratio is all the way down to 6. PRU is equally cheap with a PE ratio of 7. Further, PRU is now technically oversold and might have bottomed out on Wednesday. Just keep in mind that if the market continues to correct, PRU could continue dropping lower in the short term. In the long term, however, PRU is a great buy. So I will give you a buy under price of $105 and an ideal buy-in price of $95 on PRU. I'm not going to give you a stop loss price. PRU is already really cheap. If it continues to drop lower, say to $85 or lower, I would just keep buying. So if you are interested in banking stocks such as PRU and GS for a long-term hold, I would just slowly dollar cost average into them given the current market volatility and the fact that we don't really know if they're going to keep dropping or if they're going to rebound and start going back up. And the last stock we're going to talk about today is VTI. This is a Vanguard Total Stock Market ETF. Keena Grace recommended adding VTI to your portfolio as a way to balance out your portfolio and limit the severe swings you might be seeing. And I agree, especially if you loaded up on meme stocks back in January and February and they got crushed in March and April. With the stock market seeing new all-time highs every month this year, there is no reason your portfolio should be down 30% like Chris Sain's is. StockMo's public portfolio was up over 15%. Jeremy with Financial Education's public portfolio is up over 60%. And Invest with Henry's public portfolio is up even more than that. If you don't want to buy these so-called boomer stocks to balance out your portfolio, a market ETF such as VTI is an easy way to provide balance and diversity without having to hand select specific stocks. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below and let me know if this video was helpful for you. Let me know if you want more trainings like this in the future. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit any amount, even $1, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident, or if you want to trade OTC penny stocks, or if you just don't like payment for order flow, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.